So what is the best dividend ETF in Australia right now? So I'm going to talk about my favorite dividend ETF, and I'm also going to mention two others that I like later at the end of the video. But let's first go into what I think for most investors is the best dividend ETF. In Australia, I find it's really difficult to find a good dividend ETF. Usually you can get quite high yields, quite high dividends or distributions as they're called with funds. But a lot of the times they don't have the growth. And likewise with growth ETFs, you don't get the dividends. So it's hard to find an ETF that has both. It's kind of why I like single stocks better than ETFs for dividends, mostly because I can curate my portfolio better to choose those companies that have both growth and dividends. But let's get into what is my favorite dividend ETF, and hopefully you'll agree with me. You might even have this one. I have it. So it's probably not going to be a huge surprise that I think the best dividend ETF in Australia is VHY, Vanguard's high yield fund. And it is the most popular dividend ETF. It has, I think, 10 times more investors holding that fund than it is some of the other funds that are similar. Now the yield has been a little bit low in the last year and a half. It's been around, I think it's currently listed at 4.2%. Although the next distribution payment that's coming up next week, I think, is going to be one of the highest it's been since 2018. So that dividend yield is going to bump up to over 5%. It's a really low cost exchange traded fund. Now with fees, you don't actually pay the fee directly. It comes out of the fund returns, but it's only 0.25%, which is really low for an exchange traded fund. And the reason for this is because there's not a lot of buying and selling going on. It's a buy and hold ETF, so they hold the same companies pretty much all of the time. There's very little change in the types of companies that they hold. It pays 4 times a year, quarterly, in January, April, July, and October. Now the growth on this isn't huge, although it does a lot better than some of the other dividend ETFs. It's had about 10% growth in the last 5 years, which isn't super high, but it's not going backwards like some of the other ones. But it is an income ETF. You would be getting into this for the dividends or the distributions rather than the growth. There are other similar ETFs very similar to VHY, such as IHD, RDV, SYI. They all have a similar return and a similar yield, but because VHY is the biggest dividend ETF, that means it has a lot more liquidity, a lot more buying and selling going on, so it's easier to get in and out of. So quite frankly, I think VHY is the best dividend ETF for most people. Now, since most of you probably already have this one, I'm going to talk about two others that I like, but I do not have. Both are on my watch list because I find them very interesting, but I haven't purchased for the reasons I'll talk about. I think I've talked about both of these previously in previous videos. They're both from BetaShares. One is the BetaShares Australian Top 20 Equity Yield Maximizer Fund, and the other is the BetaShares Australian Dividend Harvester Fund. So let's look at Harvester first because I think it's the most interesting one. So the Harvester Fund uses a dividend stripping strategy where they buy companies just before they're about to pay a dividend, and then once they get the dividend payment, they'll sell and find another company that's about to pay their dividend. So they're harvesting the dividends from the companies. By doing this, they're able to get a really high dividend yield or distribution yield. Plus, another thing I like about it is that they pay monthly. Most ETFs pay quarterly. And I think it's really helpful for an income investor, a dividend investor, to try and get those monthly dividends coming in because it makes it easier to allocate your income. So the fact that it pays monthly is a huge bonus to me. But of course, there is a con, and that is that there's not a lot of growth with this. In fact, over the last 5 years, it's actually experienced negative growth. It's gone down. That's the reason I haven't actually invested in this fund, even though I find it very interesting. And I might in the future just put a little bit of money into it, but right now, I'm not sure. Over the last 12 months, it has increased, although the stock market as a whole has increased. So I'd say that has more to do with it than anything different that they're doing. And then there's YMAX, the other one that I find quite interesting. YMAX invests in the top 20 companies in Australia, but they use a quite advanced technique. They actually sell options on the companies that they own to bring in more income. It's called a covered call strategy. So that's how they're able to get higher returns than just investing in the top 20. The yield has hovered between 7 to 10% over the last few years. I think it's around 7% right now. But unlike Harvester, this one actually has growth as well. And because of the strategy that they've been doing, it's actually increased nearly 30% over the last 5 years, which is really high for a dividend fund. They pay quarterly, which is pretty average for most exchange traded funds. But this is the only reason that I'm still cautious about this one. The fact that they use covered calls means that there's more risk going into this fund. Now, I am sure that the fund managers know exactly what they're doing. They're very experienced, but you do need to be aware of the risks involved in an advanced strategy like this. It's much more complicated than just a buy and hold strategy, which VHY does. And that's why I'm still a bit cautious about this one. I think it's probably better than Harvester, but I still think for most investors, having that extra risk probably won't be worth it, especially when you're only getting around 2% extra or so dividend yield. So for that reason, I still think the best dividend ETF in Australia is VHY, Vanguard's high yield fund. For most investors, especially beginners, because you don't really have to think about it, it's a nice easy one and it's the most popular. Let me know in the comments if you agree, and I'll see you in the next video. Take care. Bye.